particular chapter is all about cash. And whenever I'm talking about cash, I'm talking about the asset over here that we've always written down that we had cash. Could be cash for certain things, like maybe you've got a specific account set up for payroll, or you might have a checking account or a savings account or a couple of different checking accounts. But basically, where do you normally keep most of your cash? And what?
A bank.
A bank. That's a good, easy question for you, since she's a teller.
Yeah.
Yes.
All that
But,
money.
in a bank or some type of financial institution, right? You used to wait until the bank statement came in the mail so that you could see how much money that you had in your account. But you don't have to do that anymore, do you? Because you can easily just hop over to the computer and check it at any given moment in time. But it's very important when the statement does come, and I would suggest that paper is a good thing for a paper trail in a company, because you can't just say, oh, well, the bank says I have this much, so that must be how much I have. You really do have to reconcile the cash amount with the amount that the bank says that you have. What we're going to do today with your sheet of paper is I want you to fold it in half. We want it to look like this, not a hot dog, because I said the wrong word, didn't I? We want it to be like on the left side. This is going to basically be my side of stuff that the bank says that I have. Over on the other side, I'm going to write book. And the reason that I'm going to say book is not that it's a fairy tale, but because that's going to be my cash account. My ledger book, my checkbook. So the terminology that you're going to find in your textbook will be calling it the book balance. Okay? So if you can think about your cash account, whatever the balance is of that cash account is what you're going to be referring to when you're comparing it to what the bank says that you have. And I'm going to use this example that's in your ebook. So it's in chapter 7. And it says, to illustrate this preparation, we're going to use the Maple Consulting bank statement. And this bank statement shows the balance that the bank is saying $1,749.09. The balance, see there, the balance in Maple's check stubs and the general ledger cash, there's my cash account over here, is saying that I have $2,393.23. So basically, if you're looking at your cash ledger, the last running total in your ledger, the same one that you used for the trial balance, right, is going to be $23.93.23. So that's kind of where we're starting from. Do I balance at this point?
No.
I can't just say, oh, gee, I must have $1,700. I don't know what to do with the rest of it, because that's not the way it works, is it? So instead, we're going to look at this and see what the differences are, because when you finish, you want to be reconciled. In other words, you want to agree. Here's the stuff that happened once you went through and examined your books, and you have to literally look through it all and see what's missing here. Is that the way you would best describe it? So what I like to think of it is kind of like a game, and we're going to call this game, Who Needs to Know? Questions for today. Who needs to know this information? So we've gone through and we've analyzed it, and we found several things that are different between them, and this is where it's summarized. First one says, a deposit of $637.02 had not yet been received by the bank. So you made a deposit, $637, but this bank statement that went out in the mail probably went out prior to that deposit being made. So, what's the question for our gamers? Who needs to know? Who needs to know this information? Does your book already know that you made the deposit?
Yes.
Does the bank know?
No.
No, the bank doesn't know anything. So therefore, we're going to say, this is the group that needs to know. Am I going to add or subtract?
Add.
Add. I'm adding 637.02. That's called a deposit in transit. In other words, think about in transit, it's like moving. It's going that way, but it just hasn't appeared yet on the statement. Next one says check number 219, 224, and 227 are outstanding. There's a new word. You don't know what that is. Basically, you wrote the check, but it hasn't been cleared by the bank. So let's ask ourselves the question, who needs to know? So let's think about this. If I wrote the check,
Your book already
does
knows.
my book already know that I wrote
Yes.
the check? But the check has not cleared the bank. So who needs to know?
The bank.
The bank. And what am I going to do to this bank balance over on this side? So I have 3 of those minuses, don't I? Because I have 3 different checks that have not cleared. Now, there's information down below here that tells the amount of these checks, but I already know it. Someone's going to go ahead and write it. One of them was a $200 check. One of them is a $25 check. The other one I can't remember. So I'll have to pull it down here. See? $67.78 check.
What was the exact definition of outstanding that you just said?
An outstanding check is a check that you have written, but it has not been presented to the bank, so therefore the bank has not paid it. Needs to know? The bank needed to know about those checks that you had written that was coming. And you do that, don't you? You look at your bank balance and you say, oh, but I see here, my rent check hasn't cleared yet. That's what that is. So, but you do account for it, don't you? You automatically in your head say, well, that's definitely a minus. But remember, this is for your company, and it needs to be in writing. You always want a paper trail. All right, the next one says, check number 214 was written for $18.98. On these kind of error things, I always have to draw it. Because, you know me, I'm a picture person, right? Can I draw over these letters? Will that bug y'all? So I'm going to say I'm dealing with cash. Because I have written a check. And I must have written it to pay a bill. So I'm going to put this as accounts payable. That's a liability, right? Can y'all see that? Okay? And I'll flip this off when we do. The check was written, I'll write it right here. It was written for $18.98. But what was entered in my books? $19.88. So let me turn this off real fast so you can see this. So $19.88 then was shown in my books that I wrote the check for $19.88. And I paid this bill, so that meant my accounts payable went down by $19.88. You with me? So that means this balance right here for cash is showing that a check went out for $19.88. But in reality, I had played this with the numbers. And instead of the check being written for $19.88, this was the amount of the check that was written. So it should have been that. So how are you going to make this? What will you do to it?
Take away 9.
So instead, the difference of these two is 90 cents. So you're going to have to go back
Oh,
in,
so you'll add
and
it.
you're going to have to add that 90 cents back
Yeah.
in, because that way these two will equal this.
Ah,
Okay.
And then you'll have to add the 90 cents back in over here, because you really didn't pay $19.88. You only paid $18.98. Yes?
You only needed to pay $18.98.
You only
accidentally.
needed to pay $18.98.
Okay, so you just.
And you paid $18.98. You
Okay.
just wrote it down wrong.
Okay.
So therefore, because you wrote it down wrong, you have to fix it. You can't just say, oh darn, I wrote that down wrong, let me write it down right. You can't do that.
You can't do that?
No, you can't do that. You have to fix it. And so in order to fix it, you have to think about the debit and the credit that would fix it. And that's going to be, as far as our bank reconciliation, I'm going to have to add 90 cents back into this balance in order for it to work. Is that
That
good?
never erase anything. A debit and a credit's always going to be the one that
That's
fixes
right.
everything.
That's what's going to fix it. After we've looked at this, then does everybody agree that when we say who needs to know this piece of information, does the bank already know that I wrote the check for $18.98? That's the right amount. They paid the right amount. Who needs to know this information?
Your book.
We do. We need to know that we're going to have to add 90 cents over here on it.
what would you put in the book? Would you put like for error?
I am so glad you said that, because, and that's the reason why I already have this written up here, because guess what, guys? Everything in your bank reconciliation process, everything that affects cash, you will have to tell your journal and post to your ledger every one that affects your cash account, because when you finish at the end of this, when you balance these two, your ending balance for cash has to be the new amount, okay? So in just a few minutes, when we start going through here and we start to journalize these, do you see what you're going to have to do for this 90 cents? You're going to have a cash debit. Anytime you have a plus for cash, you know it's a debit for cash. And the credit is going to be here because I wrote down that I paid more than I actually paid. Now, sometimes on your problems, it could be just the opposite. You wrote down that you paid it less. You know, it could be that you have to subtract more. Maybe you took out too much money. So you really have to look at these examples right there. The next one says, Mabel made an ATM withdrawal of $100 for personal use. Uh-oh, she forgot to write it. Who needs to know this? Does
Bank
the bank
notes.
know that you went?
Me.
Did you write it down?
No.
So what am I going to do over here?
Write it down.
Subtract
We're gonna-
100.
And I'm going to have to subtract $100. The next one, the bank returned a non-sufficient fund check for $200. Katrina came in to my office supply store. She bought $200 worth of office supplies. Okay. How would I have recorded that when she made that purchase? She paid cash for it, by the way. She wrote a check. How would I have recorded that? I would have said cash went up for 200, and what happened to my sales over here? Would it have gone up 200? Everybody agree? That's what would have happened, right? So, Katrina leaves, she's got all of her goodies, and she's happy-go-lucky on the way, right? Well, something had happened. She had, who knows, identity theft or something went on. But anyway, whenever I get this, I make a deposit in my account for $200. But at the time, when I make my deposit, Katrina didn't have enough money to cover this sale. So what happens? The bank says to me, I'm sorry, but you don't have $200. Now, this balance is showing what? That I do have $200. So how am I going to do that? Who needs to know that I didn't add $200? Does the bank need to know it? Or do I need to adjust it over here?
You need to adjust it over there.
I need to adjust over here. So what am I going to do? I'm going to be subtracting $200 out, right? But now, Katrina she's not, I'm not going to let her off the hook. She cannot go and take all of her supplies. So when it comes time to me to figure out how am I going to journalize that, since I already have this written, what would happen? Does it affect my sales? No. But it does affect this because I'm going to have to take this out of cash, right? But guess what it's going to go into? It's going to go into accounts receivable, and now I'm going to be looking for Katrina and trying to collect my $200. And the very last one is the bank service charge of $1.80. Who needs to know that?
The book.
Your book needs to know. And what am I going to do to the book side? I'm going to subtract. Somebody do this for me. Take this number, plus, minus, 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 and come up with a new total. And another person take this bank balance, plus, minus, 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 and come up with a new total. And let's see if we now agree.
Which one you doing?
Are we reconciled with the bank?
Yes.
So, you understand the bank, this stuff is all going to happen with the bank. Now, of course, if I had something here that was a problem with the bank, this would be the time that you could call and get this rectified. But right now, this is what you're concerned with, is because your account shows that you have 23, you only have $2,092. So you have to go in and make these journal entries, and then from your journal, you have to post them over to your ledger. Okay? Simple? Now, I like to do it apart, like we just did on your piece of scratch paper. I want to go ahead and pull this down so that you can see what one actually looks like that you'll be doing for homework. with the bank balance, and it's adding the deposits in transit, and then it subtracts your checks, and here's my bank side. And then below that is my checkbook side. So here's my two that I'm balancing to. But to me,
That looks confusing.
it's just easier to do it like this. Does that make sense? But if you've done it on a piece of scratch paper, is it fairly easy to work with? And you really can't. This is not a formal document. This is just something that you need to put inside your files that says, yes, you reconciled it. And you've identified what things are, you're going to group together everything that you add. You're going to group together everything that you subtract, you know. And from both areas, this is where you're adding, this is where you're subtracting. So you've got an adjusted bank balance and an adjusted book balance. Make sense?
Mm-hmm.
Good. So now let's take a look then at what, I think it's going to be right there, what those journal entries would look like. You see that cash and accounts payable? That was that first 90-cent one that we talked about. This is the example that's going on in your chapter 7 that you've done. Okay, how about that $100 that you forgot to take out for your drawing? Debit to drawing and a credit to cash. What about the next one? That was the one that we just talked about the NSF check. Now I had to take that $200 out of my cash and roll it over into accounts receivable. Again, it's always easier to put it like that chart that you girls had. Put it in your T accounts. Then you can easily move it from your T accounts over into your journal. And then most of the time with a service charge from the bank, they just consider that as miscellaneous expense. So your miscellaneous expense is going up and your cash is going down. And notice that on all four of these, cash is either a debit or a credit because all of this is affecting cash. Of course, once it's in your journal, then we're doing what? We're posting it over to the ledger. So once you finish this, the running balance in your cash account will be